Okay.
All right, so exam technique is very important. When you're looking at past papers, because this is the first past paper that you're looking at after the content, the approach should be to look at the sections that you've been given. So in this past paper from 2019, you've got four separate questions. You've got a CC disclosure question here, out of 42 marks, 50 minutes. You've got a partnership liquidation question, which could be piecemeal or simultaneous. Then you've got closed corporations, which is a cash flow. And then the last question is the branch, okay, which is 8 marks. So you can decide where you want to start. Obviously, it's good to start with topics that you're comfortable with because it also builds confidence, and you should be able to bank some time. If it's an easier question, at least then you'll have time for more difficult questions later on. Okay, so I'm just going to go in order. I'm going to start with question 1, and then I'll do 2, 3, and 4. First question is disclosure. CC, statement of profit and loss, and a statement of financial position. Okay, let's have a look at it. Okay, you've got an extract, you've got adjustments. The required is important because you have to draw up the requirements. Okay, so A, what's the year in? 28 Feb. Okay, there we go. And then just in terms of disclosure, obviously you're going to have sales, cost of sales, gross profit. Okay, I'm just going to group it as other income. Okay, and then other expenses. Okay, because this is a CC, I am going to have financing costs. I'll have profit before interest and tax, just to show the additional disclosure. Interest or financing costs, you can write that down there. Then profit before tax. Okay, they also want, okay, they only want the assets section of the statement of financial position. Okay, so notice, in terms of exam technique, you wouldn't have to draw up all of those sections because they're only asking for assets. Okay, you can actually probably do more, but it might be limited in terms of what the question has given you, and you might not be able to draw up the other sections. I would just stick to what they've asked you to do. If they ask you for assets, then look at non-current and current. And that's pretty much it in terms of disclosure. Okay, so templates are obviously important. Those templates you can actually use the ones that you've been given, or use the old Excel spreadsheets and just delete and update what you require. That's fine. If you're doing it online, then you can maybe use technology to your advantage. So you'll have all these templates ahead of time, and you can just literally complete it. Okay, if it was written, if this was done on an exam venue, okay, and you had to write this down yourself, you obviously would be given folio paper, and then students have to obviously recreate and draw up the disclosure. Okay. All right, so that's what we've got here. Obviously, we need to follow IFRS. Notes to the financial statements are not required. Round off the amounts to the nearest rand. Okay, that's important. And calculations must be shown. Okay, perfect. So now you go to the question. Okay, you get your easy marks, and you look at obviously income and expenses, and assets. Okay, Lorato and Sali started a CC. Okay, Pushanani CC, and you've got the rights covering the cycle tour of Limpopo, and they're obviously selling merchandise at the local market. In order to finance stock, they've admitted a new member. Okay, so a new member. So you've got 3 actually. You've got different parts of the CC here described below, and then you've got the different members. Okay, so obviously members' contribution, all capital. Okay, so LSN, all part of the SOCI. Okay, it could be part of this, but it has to be disclosed as part of the equity section. Don't need it. Loans to members. Asset or liability, do you remember?
Asset.
Very good. Okay, so when you have a loan to a member, obviously the business is giving the loan to a member, so the business will be receiving that back. Okay, so loan to member, you would assume is long term unless told otherwise. Okay, so Soli's loan. Just read the right line. Okay, 1312500. Okay.
These numbers that they give us for this question are actually really hectic.
Why do you say?
Because there's like 6 numbers for like an
Millions.
amount. Yeah.
Yeah, well, it's probably more realistic actually because obviously contributions by different individuals. A loan, I mean, you could possibly take out a loan for $1 million from a CC, depending on how much capital the CC actually has available or how much cash the CC has available to give to the members. So it's not completely unrealistic, but I get what you're saying. Obviously, the numbers are big, so typing this into a
Yeah.
calculator would be quite challenging if this was done, let's say, closed book on campus or at an exam venue. Okay, loans from a member.
Liability.
Exactly the opposite. Okay, so you don't have to look at loans from, you're only looking at loans to. Okay, there we go. We've got land and buildings. This was at cost. Okay. Right, so when I see that, I'm expecting probably some sort of evaluation, not evaluation, revaluation, okay, or some sort of impairment potentially, because they're talking about this at cost. Okay, this is what, 8250000. Okay, all right, and then we've got equipment, in brackets, 1781250. 1781250. Accumulated depreciation, you can see that's at the beginning, so minus 300,000. Okay, trade receivables I need. This is 492195. 492195. Okay, trade payables is liability. Retained earnings is equity. Bank is an asset. Investment in S at fair value. I would again assume that this is long term. Okay. Inventory, that's opening stock. So when I see that, I'm expecting cost of sales. Why isn't it scrolling down? I think I have, okay, there we go. Okay, so when I see that, I'm expecting cost of sales. Okay, so cut, let's just paste it down a bit. Okay, so opening stock, add purchases less purchases returns, add other costs less closing stock. Okay, so inventory here, 1st of March. Opening stock is 318750. Okay, what else? Allowance for credit losses offset against your creditors. Debtors, okay, minus 375. Sales, okay, we've got sales 13,120,500. Okay, we've got purchases. So there's the giveaway. Okay, I kind of knew that they were going to go this route because I saw opening stock. Okay, that's just exam technique. It's just picking up on stuff from the question. Okay, general expenses. $250,305. Just double check the amounts that I am reading them correctly. So there aren't any errors. Okay. Okay, 1.35 million. Remuneration. This is special disclosure. Carriage and purchases. Credit losses. Uh, 58125. Okay, settlement discount received. Okay, we've spoken about this in the past. When discounts are received, they're received from your creditors. Okay, so Eunice's probably going to take the settlement discount received and it's going to offset it against your purchases basically. All right, so I'm going to include it here as part of your purchases. Eunice's probably going
Is
to
it?
take.
I just put a line under and I said discount received, and I put a negative.
Well, that
Can I
would
do
be
that?
here, but it would be a positive against your other income. So other income, you could show it separately, but if you're offsetting against cost of sales, yeah, you could show it separately if you wanted to, but generally you'd offset it against the purchase because it's obviously going to affect your creditors. So settlement discount received, in actual fact, should be part of that. So 4.5 million, okay, less the settlement discount received of 7,875. Okay, your
Okay.
answer should still be the same, so it shouldn't matter. I'm just going to show it like that because they tend to offset it against purchases and then they offset the other discount against the sales.
Okay.
All right, carriage and sales. Okay, SARS income tax. Settlement discount granted. Okay, here I'm going to show it there. Okay, 27,570. Alright, was that it? Yes, okay, then we have to look at additional information points. So, okay, point number 2.1. Provision must still be made for depreciation on equipment, 20% per annum on the diminishing balance method, including the equipment at cost. Account is a machine which was purchased on the 1st of September for that amount and immediately put into use. No other purchase or sales of equipment to occur during the year. Alright, so you do need to look at the timeline. So end, beginning, during the year. Okay, we bought and including the equipment purchase on, okay, for what is it, 281250 cash. Okay, so you bought new there. Remember the balance that we had here, equipment at cost was for what date? 28th of Feb. So the equipment at cost was at the end of the year. So the beginning would have been 1.5 million. So in terms of depreciation, okay, the cumulated depreciation was on the 1st of March. So 300,000 here. Okay, and then you've got that asset that you bought during the year. Okay, so that gives you depreciation here of 281250 times what is the rate? 20%.
20.
Okay, times September,
6 months.
October, November, December, January, February. I count 6 months. Okay, and then obviously this carrying value. So depreciation here would be 1.2 million times 20% for the whole year. All right, so there's your total depreciation. All right, so you would literally 28,125 plus 240. I hope that's correct. Let's just double check. 28,125, perfect. Okay, did you get the same thing?
What did you get? 268125. I got 269325.
Okay, did your diagram look the same?
Yes.
Was there a problem with the working? How many months did you count?
6.
September, October, November, December, January, February. Okay, 6 is right. 6 over 12, 20%. Yes, that's right. This was 120,000. 120,000 times 20%. This looks right to me, hey?
Okay, I see my problem.
What happened?
It was with the, because I did it on a calculator. So I think my adding somewhere for the first one didn't come out correct. But I did the exact same thing.
Okay, so as long as you've got the right diagram, that's the important part. If you made a little mistake with the calculator in terms of typing the amounts in, that's obviously minor. That you can just be careful of going forward. But as long as this is correct, as long as your interpretation's right, that's the important bit. This is fine, hey?
Yes.
Okay, great. Okay, a debtor owes the business that amount, declared insolvent. Okay, obviously I need to show this here as well. Minus 240,000 before I forget. 28125. All right, there we go. Okay, now we can move on. All right, so bad debts, credit losses, plus 23295, trade receivables, minus 23295. Okay, allowance for credit losses must be adjusted to 23. The allowance was 37. Let's just double check that. Where's the allowance? Here, yeah, the allowance is 37. So, is the allowance going up or down? The allowance is going down. It's adjusted to. So, if I decrease an allowance, I would debit it. So, I would debit the allowance and I would credit the credit losses. So, negative, open brackets, the difference. 37500 less 23445, close brackets. Close brackets equals. Okay, this is probably going to total up already, so equals answer. Okay, what does that give me? Copy paste. That's going to go here. Okay, the allowance is going to decrease by the difference. So actually, I need to show that here. Okay, there we go. Alright, so that allowance, this is the allowance. Okay, if I work out this, I should get negative 23, which I do. Negative 234545, that's correct. Okay, good. So that adjustment is correct. Okay, so I've updated my credit losses and I've updated my allowance. Perfect. Next. Okay, interest must still be provided for on the loan. Accounts to members. Loans to members is an asset. Okay, I do need to look at this. At a rate of 50% per annum on the opening balances of any existing loans. Interest on these loans should be capitalized. Okay, that's important. So add it to the balance here. No additional loans regarded during the year. All loans are unsecured and immediately callable. Okay, if it's immediately callable, it's short term. Alright, so that needs to move down. Okay, so did I have any changes during the year? No, I didn't. Okay, no additional loans were granted. All the loans were secured, so all I have to do is just take the opening balances. So 15% on the loans to. Okay, I've got the amount here actually. Plus 15% of I can't see the amount. Okay, here's it. 1312500. Close brackets, close brackets. Okay, this is going to be disclosed as interest on loans to members. Loans to members. Okay, there we go. So 15% of this. Okay, and then obviously adding up all of that. Okay, that's it. Alright, that's another one complete. Interest, good. It's capitalized, perfect. I've shown it there, great. Next. Interest is charged at 20% per annum on the opening balance of the loans from. Okay, so because it's a loan from, it's going to go, it's actually going to be part of financing costs, but I'm going to show it separate because interest is obviously interest on loans. Do we have a loan here? Were there any loans here? I can't remember seeing a loan here. No. The only loan was from the member. Right, so no third-party loans. Okay, so actually we can leave it here. Okay, so interest here, asterisk. Okay, members. Alright, so what is it? 20% on the opening balance of the loan. Payable on the 1st of March. Okay, so that's obviously next month. So it's an accrued expense. Okay, so if it's accrued expense, you wouldn't disclose it. So this would be interest that's payable, basically. Okay, but you would have to show it in the income statement. All right, loan from N. Where's loan from N? Loans from member N here. 562,500 times. What is the percentage? 20%. Okay, is that right?
Yes.
Okay, the investment in S consists of 50 ordinary shares acquired on that date. Okay, so ordinary shares, where are you there? Okay, S is a listed company and the investment was acquired for trade purposes. Okay, so if it's trade purposes, it's obviously short term. Okay, on the 28th of Feb, the fair value of the investment amounted to 1.8 million. So it went up. Okay, so add 300,000, okay, to give you 1.8 million. And then you've got to show the fair value adjustment in the income statement. Okay, an additional 300,000. Okay, that's complete. Right, closing stock given to us 189,375. Don't forget to show that on the face of the actual statement, because it's a disclosure line item. Okay, closing stock, closing stock. Perfect. Okay, next. The normal income tax in respect of the financial year amounted to that and must still be recorded. Okay, so what was the actual tax? The tax was that. Okay, so there is going to be an accrual. This will obviously be a liability. You'll have a SARS liability because the normal tax was more. Okay, so obviously to add the difference, okay, you're going to have to add 659505, which would have been a SARS liability, okay, or accrued expense basically. Right, and that's the end of the question. Perfect. So to get your disclosure marks, you have to obviously tally up. Okay, opening stock, no returns. Okay, so we've got everything out. That's all right. Okay, opening stock plus purchases. Oops. Okay, go back. Less 0 returns plus carriage minus the closing gives you that figure. Okay, that figure is obviously going to be a negative, so in brackets. Okay, subtract gross profit. Okay, other income is this plus that. Okay, other expenses. Ooh, I've put these in the wrong column. It's fine. We'll move them up. Ooh. Depreciation. Okay. All right, profit before tax and interest, this plus that minus the expenses gives you that figure. Okay, this minus that. Okay, this minus that. There's your profit for the year. Okay. All right, that was it. Obviously, you just have to... Did you get the same profit, different profit?
I got the exact same thing. The only problem
Very
that I
good.
had was the depreciation, which I had to
Okay,
change now.
brilliant. Well done. So
Yeah,
everything
yeah.
else is fine. So you got... we'll go and we'll look at the mark allocation just now, and then I'll give you an estimate of what you had got for this exam. This needs to go across. That's very good. So see, your basics are very good. Okay, so... Okay, there's going to be a column here. I need to work this out. Okay. Right, same answer there.
You got 134073. I got 113.
Ooh, what didn't you do right?
Right.
Land and building, same
Nine
figure.
four six. Yes, land. Okay, so non-current, I got the exact same thing.
Equipment, same figure.
Current, yes.
Okay. Trade receivable, same figure.
Trade receivables, I got 107955.
Ooh, no. Okay, that's wrong. All right, the mistake is here.
So the mistake that, okay, the thing that I did was, do you remember when they changed it? I just added 14055.
Which points?
I can't remember which one it was, but they changed it from 37,000 to,
Oh, you mean the allowance.
yes.
Okay, so the allowance must be adjusted to. What was the allowance? It was
So the
37,500.
allowance?
So you have to
Yes.
adjust the allowance. The allowance needs to come down. You're subtracting the difference. That's the rest.
So how, okay, so then the difference was 14055. And in my workings, what I wrote down was debit allowance and credit loss.
That's correct. So you're debiting the allowance and you're crediting
So
the
I
credit loss. So
added
the
it.
credit loss is here. The credit loss,
Okay.
there's the adjustment.
Okay. So I did minus it there,
That's good.
but I added it
No, you can't add it.
here
Why are you adding it? You're
to
adjusting the
bring that.
allowance, so it's a separate working. There's a bracket here. Can you see the brackets? You have to show this as a separate working.
Can you do it for me in a T account, please?
Okay, so
Like trade
if you
receivables,
had
trade account.
if you had allowances for credit losses, okay, the balance was 37500. It should be 23445. Okay, so okay, credit losses will be decreasing by an amount. Okay, then obviously in terms of disclosure, okay, the balance was okay, this minus the 23445. Okay, if I just show it as that. Okay. Right, then you have to write off the bad debt. So obviously the 23295 was for point number 2.2. Okay, so you had point 2.2 here and point 2.3 there, and obviously your trade receivables is the net amount. Is that okay?
So can I just put the final amount?
Final amount as
Two,
in the 23445, yes,
three.
because that is the
Yeah.
allowance. But you have to adjust because remember it's going to affect this.
Yeah. But I got that part right. I
Then that's
just
fine.
got this part wrong. So
Okay,
you
yeah,
got
just be
four,
careful how
four.
you do it. As long as you've got the right disclosure, that is the disclosure. Whether you're adjusting the allowance and then getting it, or whether you're just showing the allowance and then getting it, it's fine. As long as you've got 445. So was that the error there?
Do you know what the actual error was? So it was 37500, and then I added.
Oh, okay. All right, so you're probably adding instead
140.
of subtracting. So silly mistake, yeah.
It actually still works out if you add it. I just
Okay,
added
well,
one more
did
zero.
you have 445 here?
I added 1 0 mistake to the 37500.
Oh, okay, so you added a zero somewhere.
Yeah, but if you
Okay.
do add it, it still works out. If you,
Yeah, I
because
mean,
you
there could be
minus
other ways of working it
7
out. As long as you get the right allowance figure,
answer.
it's fine.
Okay.
Okay, the rest was fine. This was fine, this was
Okay.
fine, that was fine.
Where's your bank?
Bank, where's bank? Was bank a debit?
I have bank
Where's
as a
bank? Oh,
debit.
bank is debited. Why didn't I show it here? I might have, I think I read it and then I didn't put it in. Yeah, that's odd. Okay, or I might have overlooked it. So let's just double check here. Members' contribution, loans to yes, land and buildings, equipment, trade receivables yes, trade payables yes. Okay, I think bank I overlooked. Okay, yeah, bank definitely has to go there. Okay, I left that one out. 80625. Great. So there is another one. Bank is a debit, so it is an asset. So that needs to go up. All right, yeah, I agree with that. The investment I've got, yes. The inventory I've got. The allowance I've got. Sales, purchases, general, all of that I've got. The rest is fine. Okay, yeah, that's perfect. Okay, great. Good job. Same as this answer.
Just 1 second equals
Did you also have loan
one
here,
three. Yeah, one
inventory,
three
all of that
four
stuff?
eight. Yes,
Yeah, okay, good. That's as long as you've got the
I
same
just have
figure, that's perfect.
trade receivables. Okay.
Okay, good. All right, so yeah, that was what? 42 marks. Okay, it took us around 39 minutes if I'm just looking at the recording here. Okay, so you can see your banking time in the exam. Okay,
Yes.
you've got an extra, what, 15 minutes now? How many minutes did they give you for this? Yeah, 50. So you've got an extra 10 minutes for another question. I mean, and we even went through it quite slowly as well.
Yes.
Okay, so you can see that disclosure questions are quite nice to do. Even with a long question like this, it's still pretty simple. Do you agree?
Yes.
Okay,
Yes.
good. All right, happy with that question.
Yes.
Okay, let's save this so I don't lose it again like last week when I closed and then I said don't save. Okay, so that's definitely saved. Okay, so this is question one. I'm just going to use separate sheets here at the bottom. Okay, so just when you navigate, just look at the different questions here. Okay, question two. What is it? Okay, required
Piecemeal.
steps. Sorry, yes?
It's piecemeal.
Okay, yes, yeah, good. So, exam technique, always look at the required because then you know what to do. So, if you see it's piecemeal,
Yes.
then you need to draw up
The
columns. Okay, so you'll
table.
have a big column
Yes.
and then you'll have columns for everything else. Okay, I don't
I
know how many
actually
we have.
started with this question.
Sorry?
I actually started with this question.
Good. Yeah, piecemeal is actually really, really, really easy as long as you follow the
Yeah.
process. Okay, so record the liquidation of the partial in column or format. They even want it in column, so if you didn't know that, they've even told you. And use the loss absorption, obviously from September 1st to the 12th. Okay, so that's probably the sale from September 1st to the 12th. So they don't actually want, they want the 1st to 12th. They don't want the 18th and the 20th. Okay, so you can see that you've sold more assets, but they want you to stop at the 12th, according to this. Right, you can go further if you want to, but it's not necessary for this question. Again, round off to the nearest rand. Ooh, did I round off anything here? No, I didn't have to round off.
No.
Everything was whole numbers, yeah. Okay, I remember seeing that as well in question one. Okay, so in this question, you're going to round off. Let's go to the information. Okay, obviously you've got MKT, partners at a nightclub. Okay, they're sharing profit and losses. This is important. All right, so capital, MKT. Okay, the ratio is 5, 3, 2, which is 10. So it'll be 5 over 10. Let's just make sure we've got the right partners. MKT, yeah. Okay, so 5, 3, 2. Okay, I've read that, I've got it. Carry on. All right, capital 130, 100, 80. Okay, goodwill. Okay, goodwill here is 20. Right, property, plant and equipment, 202. Fixed deposit, 60. Loan from partner K, long-term loan, I need to put in the amounts, 12, 80. Okay, what else? Trade receivables, bank. It's a debit, so it's positive, so 15,000 cash. All right, perfect. Okay, next. The parties agree to distribute the cash. Okay, they're just telling you about the piecemeal. Two partners' loan account is to be transferred to his capital. Okay, so step 1, obviously close off accounts to capital. Okay, so there wasn't any current accounts here, so nothing to close off. The loan from partner K. Okay, if it's a loan from means it's a liability. Okay, the partnership has a loan from a partner. So if it's a loan from, this would be a credit balance. So to close off this account, you would debit the account and you would credit the capital. So minus 12 plus 12. Okay, you also have to close off the goodwill to the partners. Okay, so goodwill here minus 20,000. Well, goodwill would have been a asset. So you would have credited this, then you would have debited capital. Okay, so you're subtracting goodwill and you're also reducing the capital. So it'll be negative 20,000 times 5 over 10. 3 for that partner, 2 for this one. Okay, PPE stays open, that stays open. That stays open, that stays open, that stays open. Perfect. Okay, so now we can get a subtotal just to make sure everything's on track. Okay. All right, and then I want to do a check. The check you don't have to do. I just do it because I want to be accurate. Okay, so let's just write down assets equal. Okay, owner's equity equals liabilities equal. Okay, so assets. What assets do I have? PPE plus fixed deposits plus trade receivables and bank. Owner's equity, what do I have? Capital, 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 that's it. Liabilities, what do I have? Long-term loan, that's it. Okay, so if I've done it correctly, your owner's equity plus your liability should equal your assets. It does. Okay, perfect. So now I know I'm on the right track. Okay, great. Next line. The partnership had taken out an insurance policy on the lives of the partners. The surrender value of the policy is currently 25,000 and is to be paid to the partnership on the 8th of September. Okay, so obviously we're looking at 1st September to the 12th. Okay, so is this something that will take place? Yes.
Yes.
On 8th September, proceeds from a policy received. Okay, so if it's received, the bank account's going to go up by 25. Okay, you're debiting bank. Okay, you're going to credit, let's see, this is on the lives of the partners. The surrender value is 25. So it would be a portion to each partner. So 25,000 times 5 over 10. Each part is going to get a share. Debit the bank, credit the capital. Okay, so again, copy paste, just to make sure everything is correct. Okay, this is that figure, this is that figure. This is that figure, this is that figure, this is that figure plus that figure. Alright, copy paste the working. Okay, assets, liabilities, owner's equity, great. Okay, next. The partnership reached an agreement with all its clients, trade debtors, that if amounts receivable are settled before the 30th of September, a discount of 10% will be granted on the 10th. Okay, so on the 10th, 80% of its clients had settled their accounts. Okay, so proceeds from the receipts from debtors. Okay, so the partnership reached an agreement with its clients that if amounts receivable are settled before 30th of September, a discount of 10% will be granted on 10 September. 80% of the clients had settled. Okay, so 80% of your debtors. Which column is my debtors? Here, the last column. Okay, let me just freeze the panes. Okay, there. Okay, so your debtors, 80% of the 105 is going to settle. Okay, so that means that 80% is 84,000. So you're going to subtract 84,000. Okay, bank is only going to be 90% of that figure. Okay, so you're going to receive that amount and then you're going to give a discount. The discount is going to be offset against the capital. So minus, open brackets, 84,000 times 10%, close brackets, times 5 over 10. Okay, times 3 over 10 times 2 over 10. Okay, so I now have a new subtotal. Okay, this plus that. Okay, am I still doing it correctly? Yes, assets, owner's equity, perfect. Okay, that's correct. Next. Alright, point number 5, the assets were sold for cash as follows. Okay, so on the 12th, okay, sold, assets carrying value equals 130 for 150. Okay, so profit on the sale equals 20,000. Okay, so I sold 130 minus 130 carrying value. Okay, the proceeds that I got was 150. And the profit is going to be allocated to each partner. Okay, and that's it. All right, so again, let's just do this quick. Okay, so total. All right, let's check if we're on the right track. Yes, assets, owner's equity, perfect. Okay, great. So if I'm looking at what we have, property, plant, and equipment, property, plant, and equipment, still available. Fixed deposit, still available. Long-term loan, long-term loan needs to be paid off. Okay, trade receivables, still available. All right, so pay off the liabilities. How much are the liabilities? 80,000. Okay, again, another line. There we go. All right, so do I apply the loss absorption capacity method now? Yes. Why? I have cash available. I have other assets still waiting to be sold. This cash can now be distributed. So first interim distribution. Okay, apply loss absorption capacity method. Okay, so what loss absorption capacity method says, it says assume a max loss. Okay, so what is the max loss going to be? It's going to be minus that, minus that, minus that, minus all the assets that I still have available. Does that make sense?
Yes.
Okay, all right, so that's the theory. That's the max loss. That max loss will be attributable to the partners. So this amount times 5 over 10, 3 over 10, and 2 over 10. Okay, are the partners still responsible? Let's check. Yes. Okay, so all the partners are going to get some cash. All right, so the payout will be as follows. Okay, you're going to have minus that figure there, and then you're going to have minus that figure there. Okay, and then, all right, so capital, what is the capital? There's the total minus the payout. Okay, and that's it. Check if we're still correct. Assets equal to equity liabilities, perfect, on the right track. All right, are you okay with that? And that's where you had to end. Did yours look the same as mine?
The only mistake that I made was, for some reason, I closed off trade receivables.
Ooh, okay, I'll be careful. Trade receivables can't be closed off because only 80% was paid. Obviously, there's still some outstanding debtors.
I did that part. And
Yeah,
the 21,000
you
that
closed
was
off.
remaining, I closed it off.
Okay, no, you can't. Okay, because that's a receipt from your customers. Unless they pay you, you can't close it off.
The reason I think I closed it off was because I thought maybe the remaining 21,000 will go under allowance for credit loss or credit loss.
No, no, you can't write it off. Yeah, they didn't say the rest was written off. They just said let's go back and read it again. The party reached agreement with its clients that if amounts receivable are settled before, a discount of that will be granted. On the first 80% of the clients settled. Yeah, there's no mention there about the write-off. In other words, you can't assume that the rest aren't going to pay you. Some of them paid early because they want to take advantage of the discount. The others will probably still pay, but later on. And they have time to pay because you're not closing the business yet. The business is open until you can realize those assets. Okay, this is an asset. It's just an asset that you've created from your sales.
Okay.
Happy?
I get what you say. Yes.
Okay, good. All right. So yeah, it's a nice question. I see they've changed it a bit in terms of the way that they've tested this is a little bit different. So I mean, I've got a very old YouTube video covering a loss absorption capacity method, and that was how they used to test it. So this is a slightly different version of it, but the principles are still the same. Okay, so as long as you're happy with the approach, happy with the theory, happy with the workings.
Yes.
Perfect. Okay, good. All right, so if you only made a minor error out of, what is this out of? 20, you probably would have got maybe 17, maybe 16 out of 20. Because obviously balances would have been a bit weird here at the bottom because you closed the switch,
Yes.
but the rest was perfect. So I'd probably say about 16, maybe 15 out of 20. That's still a good 80% or 75%. That's good. Okay, so yeah, it's looking good. As long as you're passing each question, you're doing well. So for example, this question was out of 42. Because you made one or two errors, I think you probably would have got maybe 38, somewhere around there. 38 plus 16 is how much? 38 plus 16 is 54. You've basically passed the assessment already. That's very good, based on what you've done. So obviously you've done the past paper ahead of time. So it looks like you've got 54 already, and you haven't even looked at the last two questions. That's very good. Okay, nice job. Well done.
Thank you. This one, question 3, I didn't do.
Okay, that's fine.
However.
We'll do it. Okay, so this is out of 30 marks, 36 minutes. What do they want here? Required says, okay, direct method. Okay, we ended last week with direct method questions because we were looking at cash flow. Remember that?
Yes.
Okay, so with direct method, we love direct method. Why? It's simple. Okay, so you have cash from operating activities. Okay, obviously you'll have cash from sales. Okay, or cash receipt. I think the right word is cash receipts from sales.
From customers.
From customers and other. Okay, and then you'd have the same thing here, but for payments. So cash payments to suppliers and other. Okay, then you'll have cash generated from operations. Okay, and then you'll have the other stuff, and then you'll have a total. Okay, net cash flow from operating activities. Okay, did they want any other sections? The cash flows from operating activities and cash flows from financing. So they do want another section. Okay, so copy paste, delete, heading, investing, net cash flow from investing. All right, and that's it. Was there anything else? No, that was it. Okay, great. All right, obviously, please note, IFRS, no notes are required. Round off again if you need to. Calculations must be shown. Perfect. It's out of 30 marks. Direct method is important. So when I see that, I'm going to get this. Where's my T account? There. Okay, we're going to do lots of them. Delete, delete. Okay, we know we're going to draw up T accounts. Okay, it's a given. Ooh, undo. Need to move it up a bit more. Okay. Alright, so I'm just drawing up T accounts because I know I'm going to have to draw up T accounts. So just to give me space to do that. And that's it. Okay, there's my workings. Alright, so I've got my template. I know what it's going to look like in terms of disclosure. And then obviously I need workings. Okay, so I'll put a whole page here. I'll write a heading. Okay, this was a written paper. I would have this on one page as my answer, and then I would have workings here, and then I would have references next to each of them for my workings. Okay, so I mean you can even add more lines here if you want to, just to make it a bit more neat. Okay, leave some space so you can show workings and so on. Okay, but that's pretty much it. Alright, with the direct method question, you're going to start with the dish information. Okay, all inventories are purchased and sold on credit. Okay, so bought and sold on credit means trade receivables.
Trade payables.
Yes. Okay, obviously receivables goes with sales. Payables goes with purchases. Okay, so I know I'm going to have to do that. Alright, so let's do it. All inventory are purchased and sold on credit. So, go back. Okay, look for your receivables control. Okay, there's it. Alright, so balance, balance, balance. Okay, what was the receivables? Okay, what was the... Okay, 18 is start, 19 is end. Okay, so start 625, end 63136. Okay, I know in my receivables account I'm looking for bank. I know in my payables account I'm looking for bank. Okay. Alright, so I've got the receivables. Was there any payables here? Let's see. Members retained here. Trade payables. There's it. Okay, the payables 45520 90080. Okay. Got the right figure? Just double check. Yes. Okay, great. Alright, what else do I need? I need my sales. Okay, so, but I need a check here as well, just to scan it. Loans, don't need. Because sometimes they talk about sales elsewhere. Investment, don't need. Ordinary shares, don't need. Members' contribution, don't need. Profit distribution, don't need. Okay, so there aren't any other points that I need to be aware of, so I can assume that all the sales were on credit. Okay, so your sales figure was 599, which would have been closer to profit and loss. Okay, so you're showing in terms of disclosure 599760 as your sales figure. Okay, obviously sales will be closed off to profit and loss. Okay, this would have affected your debtors. Okay, you're completing the accounts basically. All right, so you don't even have to show this account because there are no workings for it. But I'm just showing it just in case. Okay, you know sales will increase your debtors. Those are the sales. All right, so this side is bigger. Okay, cash receipts, asterisk, debtors, open brackets. Or let's not open a bracket, let's just write it down. What is it? 599124. Okay. There's the first receipts figure. Alright, so I've looked at it. I've got everything. Okay, then I need to look at my purchases. Okay, so obviously purchases is looking at your inventory. Okay, so do I have inventory here? Yes, I do. Okay, I've got opening and closing stock. Okay, so opening and closing stock. Let's just call it inventory, so purchases, just to make it make more sense. Okay, your cost of sales will go on that side. Okay, obviously balance. Recreate the account. Okay, inventory 20, 320. 34, 260. Okay, my cost of sales was 208, 280, 500. Double check. 280, 500, yes. Okay, then I'm going to sum up. And then this will obviously be my balancing figure that I would have paid or purchased rather. Okay, trade payables. All right, this side is bigger. Right, there's your first payments. All right, so where's it here? Okay, what is it? 249,880. 249, 249,880, 249,880. Great. Okay, there's a figure. All right, go back to the additional information. All loans advanced to members are immediately callable. Okay, if the loans are advanced to members, okay, and they're immediately callable, that would indicate that they're a short-term asset. Okay, this is a loan to members. Okay, if it's a loan to members, it's an asset. Okay, that asset might have changed value based on what we have here. Where's the loans to? Here. Loans to members. Yes, the loans to members did change. Okay, so operating, financing, or investing? Loans to members? Investing? No. Actually, yes, it would be. Because loans to members would be seen as an asset. So it would be part of it. We actually do need to draw it up. All right, so loans to members. Assets. Okay, the balance. Okay, what is your loans to members amount? 49, 500, 35. Okay, did we have any interests? Let's just check. Land and buildings, machinery? Nope. Any interest here? Members, long-term loan? Nope, nothing there. Okay, sales, cost of sales, rent, investment income, interest income, tax, credit losses, nothing there. Okay, so all loans are advanced to members immediately callable. Right, all you have to do is just work out the balance. Okay, so you actually received money. You would have debited the bank, you would have credited the loans to members. So this would have been a inflow. All right, and the inflow would have been 14,500. So part of investing, 14,500. Proceeds received from the loans to members called or redeemed, or let's say paid back. Well, it's not really paid back. Receivable, yeah, called. Let's just use that. Okay, so basically you receive money back. Okay, because it's an asset, it will be part of your investing activities. Okay, it's a short-term asset though. You could actually put that under operating. Okay, it might actually go under operating. Remember we saw that in the assignment when it was a short-term asset they put under operating instead of under long-term. Remember that?
But was that direct or indirect method?
It doesn't matter. Okay, remember when you're looking at
Okay.
investing is long-term.
Yes.
Okay, so because they said immediately callable, to me, this would be asterisk short term. Does that make sense?
Yes.
Right, and only because it's short term would I then be inclined to record it here rather than there. Does it make sense?
Yes.
Okay, so I'm going to do it that way just because we saw that previously in one of our assignment questions. Okay, so it's an inflow 14,500. Okay, right, point number 3. Investments consist of the following. All right, so you've got 2 investments. This is investing, okay, unless they tell you otherwise. Right, the maturity date is 2020. Okay, May 2020, where are we? August 2019. Okay, so August 2019, the next financial year would be the 31st of August 2020. Do you agree?
Yes.
Okay, so if the fixed deposit's maturity date is the 30th of May, that means you're going to receive 30,000. Okay, next year. All right, but you're looking at the movements this year. Okay, so did the fixed deposit change? Let's see. Where's my fixed deposit? Oh, investments at cost. Okay, they're not showing it separate. Okay, they're showing it as one amount. Okay, so obviously, what is the amount here? 118,000. It was 0, and now it's 118,000. Okay, so that means this was an outflow. Okay, so you invested in shares and you invested in a fixed deposit. Kagatla Limited, 2 outflows. Okay, so I invested 50,000. 68,000 invested on the JSE. This was classified as investment at fair value through profit or loss held for trading. Okay, so short term as well. Okay, but they're telling you it's short term, but because this is an asset and it's an investment, okay, I would show it here as part of investing. Okay, next. During the year, a new member was admitted to the business. As part of the contribution, the members contributed office furniture to the value of 45,000. Okay, is there cash flow here? No cash flow. Okay, notice this. Even if they asked you for the financing section, okay, would you have shown this? No, you wouldn't. Why wouldn't you? Because they gave furniture, they didn't give cash. Does that make sense?
Yes.
Okay, so remember with the cash flow, you have to look at the flow of money, not assets. Okay, if furniture came in, no money came in. Right, so even though this is seen as inverted commas financing, right, it's not part of the cash flow. Okay, you've got investing here and you've got operating. It wouldn't have been part of financing. Does it make sense?
Yes.
Okay, this I do need. Okay, distributions will either be part of operating or financing. If it's a distribution from profit, it'll be part of operating. Right, so this I need to draw up. Okay, I need my retained earnings account here. Okay, so retained earnings. Starting balance 53,800. End balance 150,820. Okay, they told me the profit was how much here. Oh, they didn't tell me the profit. They told me what the members distributed. Okay, so distribution to members. Let's do the payable first. And then let's do the distribution to members. Okay, so on the 31st of August, the members decided on a final profit distribution of 28. Okay, so 28 is going to be given to the members. Okay, so distribution to members. How much? 28. Okay. 28,000 is distributed. Okay. Go back to your information. Okay, so I'm looking for, let's see, do I have anything there? Nope. Do I have anything here? Retained earnings I got. Anything else? Distribution to members payable. There, I've got something. Alright, so I've actually got a balance here. I need to show that. Okay, what is the balance? Distribution to members payable, 73. $51. Okay, what else do I have? Nothing else there. Alright, sales, don't need. The profit I do need. Do they give me a profit? No, they don't. This is an extract. Okay, if it's an extract, you can't use this information to work out the retained earnings. So retained earnings, you can't recreate, okay, because there's no profit figure. So you don't actually have to worry about it. Okay, you're just looking at those two. Alright, so balancing off this account. That side's bigger. Okay, so... $50,400 is the amount that was paid. Okay, so 50,400. $50,400, perfect. Okay, does that make sense?
Yes.
Okay. All right, and that's it. That was the last point. Now you need to go back and you need to look at all the other things that you haven't looked at yet. All right, so I haven't looked at land and buildings. Operating? No. Investing? Yes. Okay, the land and building is changed, so that means I bought more. Okay, the purchase is going to be negative 665 minus plus, because I need to work out the cash flow outflow. Okay, there we go. All right, that's the difference. Right, outflow. Okay, machinery. Did the machinery change? Yes, it did. Also outflow.
Yeah.
Okay, machinery was 427,720, 349,700. Okay, outflow minus 78. Okay, investments at cost I looked at. Loans to members I looked at. Did I, hey?
Yes, you did.
I'm sure I did. Here you are. Yes, okay. Alright, just double check. Okay, inventory I did look at. Okay, trade receivables I did look at. Prepayments I need to look at. This is what? Prepaid water electricity. Prepaid water and electricity. Okay, then I'll need the water and electricity expense. Okay, so the prepayment for water and electricity was 10,4. Water electricity expense is 34. Okay, so if it's an expense, we would have closed it off to profit and loss. Okay, so profit and loss. And that was what? 34334. Okay, so this we need to close off, basically. We can actually close it off to the water, electricity. It doesn't matter, either or will work. So you could have closed this off to water, electricity. Okay, so that would have been, oh, hold on. There, okay, and then obviously that figure, 10,400, all right, prepaid water and electricity. All right, so now I need to look at bank. Okay, so you would have paid water, electricity amounting to 23,934, 23,934, 23,934, 23,934, 23,934, 23,934. Perfect. Okay, does that make sense?
Yes.
All right, carry on going down. Accrued rent income, I need to show. Okay, accrued rent income. All right, what is it? 0, 6.5, 6.8. Okay, and what is this for? This is for rent. Okay, so rent income. Where are you? Here. Okay, how much is the rent income? 1360. That would have been closed off to profit and loss. Rent income 13,600. Okay, so your rent income, your accrued would have been 6.8. Okay, then obviously you're looking for bank. So bank went up, debit bank, credit rent income. You received, okay, 6.8. Okay, great. So half of it was accrued and the other half was actually received. So 6.8. Rent income. Okay, go back. All right, I've looked at that. Bank, I don't have to look at. Members' contribution, financing. Retained earnings, don't need. Okay, long-term loan, financing. Depreciation, don't need. Allowances, don't need. Okay, that's a non-cash item. Accrued water, electricity. Ooh, we had water, electricity. Okay, you had prepaid water, electricity. Now there is an accrued water, electricity. So we actually need to update this working here. Okay, so maybe just to show it on the left or the right. Okay, so you actually also had an accrual here for the end of the month or the end of the year. Okay, you actually had a liability accrued. So you had prepaid at the beginning and accrued water, electricity at the end. Does that make sense?
Yes.
Okay, so we do need to adjust for that. Okay, so You had nothing to start with. You had 4 to end with. Okay, so if I'm crediting this account, I'm going to debit that account. Right, so 4 has to go there. This is going to go to the water and electricity accounts. Okay, and then this would be your accrued water and electricity. Okay, so I need to show that there. Right, and this figure is going to update this minus that. Gives me, okay, so it should actually be 19,534. 19,534. Let's update our water electricity. 19,534. 19,534. 19,534. 19,534. 19,534. 19,534. Perfect. Okay, happy with that?
Yes.
Okay. Let's see. Distribution to members, we looked at. Trade payables, I think I did look at. Yes, I did. Okay, current tax payable, haven't looked at. Actually, we don't have to delete that one, just the bottom one. Okay, so tax payable 27,200, 40,800. All right, what is the tax? Where's the tax? Tax. Yeah, income tax expense. 136,816. Okay, so add up. All right, bank 123,216. 123,216. 123,216. 123,216. 123,216. 123,216. Great. Okay, it's special disclosure. Tax paid goes there. Ooh, hold on. Why did I write it there? Sorry. Cut. Paste. Okay, it's definitely not investing. Sorry. Yeah, it needs to go under operating. Okay. All right, let's go back. Go back to the top. Okay, we looked at all of this. We are here. Current tax. Okay, I looked at current tax payable. Brilliant. Okay, sales did I look at? Yes. Cost of sales did I look at? Yes. Rent income did I look at? I think I did. Let me double check. Rent income, yes, we did. Okay, investment income, dividend received, we didn't look at, so that's an easy mark. Okay, dividends received. How much? 10,200. Okay, interest expense. Did I look at? No, I haven't looked at. Okay, so again, it's special. Interest paid, 8.5. Income tax I looked at. Credit losses I don't look at because it's a non-cash item. Water, electricity I have looked at. Depreciation is a non-cash item. That's it, the end. Okay, so your receipts, your payments, cash generated from operations, obviously the net amount. Okay, then you're going to add and subtract here. Right, there's the net cash flow from operating activities. All right, investing activities. Okay, sum up. All right, and that's it. That was the question. Is that okay? Does it make sense? Are you happy with the cash flow?
It makes sense. I think I just need to do a little bit more practice with cash flows.
You need to do lots of the tier counts, yeah. That's the hard part. Okay, especially for a
Yeah.
question like this because it's direct. So when you look at the additional information, that guides you in terms of workings. Okay, most of them I've already done. And then obviously you go back to the question and you look for the easy stuff. This was easy, that was easy. The rest you have to calculate basically.
Okay.
Okay. All right, so question 3, okay? What I would do is obviously I would try do this again. Obviously not now, but when you have time, and then you can just check it and you can look back and see, well, okay, does your working look similar to this working? All right, because that's how you get better. All right, even those textbook examples in the study guide actually, you can actually close the solution, do it again, and then see, can you get all those tier counts? Okay, remember we did those tier counts last week? Unfortunately,
Yes.
when I closed one of the files, I didn't press save, so I lost that information, but we still have the video. So you can always go back and you can see which accounts didn't you get right by basing your workings on that. Okay, because remember, the textbook gave you the answer, but the answer didn't have tier counts. Right, it doesn't matter how you do it. You can use formulas, you can use tier counts, as long as you stick to the basics and you follow the rules in terms of disclosure, operating and investing. And then obviously financing is looking at debts and equity. Okay, make sense?
Yes.
Perfect. Okay, great. Let's save that. All right, we've got one more question to do. This is that big question, looking at the big tier accounts. Well, it's a small question, but a big account.
Do you want to take a 5-minute break and then continue, or?
Yeah, that's fine. How are we doing? We've only been going for an hour and a half, so if you want to take a break now, we can. No problem. Let's do that. Let me just draw up the account first, and then we can come back after the break and we can complete it. I just want to see what the requirements are. Let's see.
It's just account.
Sorry?
It's just the branch
account. That's all, hey? Yeah. Okay, so they want you to show branch inventory. Okay, it might be a selling price or cost price, we'll have to see. But that's it. Okay, round up to nearest rand, fill calculations, perfect. Okay, yeah. All right, so let's pause there. We can always come back and we can look at the rest. No problem. Okay, so in order to complete this last question, we obviously need to recap the branch counting. Okay, so when we did a branch question, it doesn't matter which question, we can just choose one. I'm just going to choose this one. Okay, just to recap, when we looked at this exercise, 8.2, obviously you'll have a head office, and then the head office is going to account for the branch inventory at a particular store. Okay, if the inventory is being recorded at selling price, then you need to show the markup separate. Okay, remember we saw that in the actual workings, all the adjustments, in other words, all the markup went to the actual adjustment account. That was something that we had identified when we looked at these questions. Okay, so they're going to be keeping all the markup, okay, in one account, and that one account is going to be referencing and showing what the branch has actually generated in terms of profit. Okay, so this account is actually the profit basically that the branch is generating from their sales. This account is representing the stock that they have in the actual business. Okay, something else we identified was when cash is stolen. I don't think it was in this one. I think it was in the other one.
Yes.
Yeah, here, the embezzlement, this one. Okay, cash embezzled by the cashier. Okay, so when you had a scenario where cash was stolen from the actual branch, okay, then they accounted for that cash as part of the branch's expenses, okay, in the branch inventory account. Okay, so that cash embezzled of 375 was the 375 here that was stolen but from the branch. Does that make sense?
Yes.
Yeah, and then we confirmed that when we do that working, we have to show it twice. In other words, we have to show it here in the actual branch inventory account, the 375, and then we also have to show it here. Where's the 375? There. Okay, in the branch expenses. Right, because you're looking at an amount of cash that was taken from the branch, and that would have been taken from the sales of the branch, basically. Okay, so just a few things just to recap, and that was it. Hey, yeah. Okay, so that was just some theory, just to recap. So branch inventory at selling will obviously show the amounts that have cost plus markup. Okay, just remember the markup needs to be recorded in the actual branch adjustment account. Okay, so all the markup amounts will be recorded separately. Okay, so what do we have here? Let's see. Okay, it's a short question. We've got our tier counts. They only want to branch inventory here. Hey, yes. Okay, and it's obviously at selling price. Okay, so if it's at selling price, then you need to show the cost price and markup separate. So let's do that. Okay, first line item. Okay, the following information pertains to the head office and the branch of this clothing store. Okay, the branch inventory on hand. Okay, so January is the start. All right, balance will be at the end. Okay, so this was at selling price. Okay, so because it's at selling price, we need to show it cost and selling price. Okay, so even if you go back, you'll see here they had the balance. Okay, remember the balance here, 4.5, and then if you look at the branch adjustment, which was here, they also had the balance. See, there's the balance. Okay, markup on the opening inventory. Do you see that? Okay, so they
Yes.
like showing it separate. So obviously 1.5 plus 4.5 gave you 6, and that was the selling price. Let me show that to you here. Where's it? Here. Inventory at selling price. Okay, so if it's at selling price, the 4.5 is including 1,500 because it's 50% markup. Okay, so if it was 3,000, 3,000 plus 5,000, 3,000 plus 1,500 is 4,500. Okay, I would have shown it like this. Okay, I would have shown balance, cost price, okay, and then balance markup. Okay, obviously the markup would have been the branch adjustment. Okay, and then the whole amount would have been whatever it was. In this case, 2,600. Okay, so you would just show 2,600 here. Okay, I want to show it separately because if they ask for branch adjustment, then you'd have to show that other amount. Okay, what was the cost plus markup here? Okay, so
25.
Markup on cost, 25%. Okay, which is 25 over 100. So cost price is 100. Markup is 25. Selling price would be 125. Okay, all inventories purchased by the head office and supplied to the branch at selling price, which is cost plus 25. Cost plus 25 gives you that. Perfect. Okay, so if they've given you selling price of 26, okay, 26 times 100 over 125 gives you that figure. Okay, 26 times 25 over 125 gives you that figure. Okay, so that's how you would have split it. You would have shown one amount here, okay, but you would have shown this amount in the adjustment accounts. Okay, then you would have done the same thing here at the bottom. Okay, so I'm just going to show the total here for this one. Okay, but then I'm going to show the balance here as well, like I did there. Okay, so 25 times 100 over 125. 25 times 25 over 125. Okay, does it make sense?
Yes.
Okay, all right, so that's opening balances. Number 2, transactions during the year ended. Okay, so you've got transactions taking place during the year. Inventory that was sent to the branch, which is at selling price, is obviously going to be accounted for in this account. Okay, so again, if you go back and you look at this, when you've got branch inventory and when it's at selling price, okay, you treat this like a normal asset account. Okay, let me write on this thing. Okay, because this is an asset, okay, you'll have a debit plus and you'll have a credit minus. So when the branch is given stock from the head office, obviously you're going to have inventory to branch. Does that make sense?
Yes.
Okay,
Yes.
and this amount is going to be at selling price. Okay, so if you look at this question, you'll see here, there, inventory to branch, okay, cost price markup. Same thing here, cost price markup. Does that make sense?
Yes.
Okay, so okay, this is the markup, but remember they're going to want you to put it in the branch adjustment accounts. Okay, so it relates to the inventory to branch, but it relates to stock that they've given to the branch at selling price. Okay, what is it? 78,100 times 100 over 125. Okay, actually, let's just copy it. Okay, and then the markup is the 25. Right, and if you add the two amounts together, you get 78,100. It's the correct amount. Good. Okay. All right, then next, sales by the branch. Notice you've got cash sales and you've got credit sales. Okay, when you sell stock, obviously that's going to affect the branch negatively. Does that make sense?
Yes.
Okay, and then again, if you look at the disclosure, okay, when you sell stock, cash sales, credit sales. Okay, here they're just showing the selling price. Okay, because later on, when you do the branch adjustment account, in this account, okay, that balancing figure, okay, this gross profit for the branch is basically going to calculate and determine that total. Okay, I prefer to show it separately because when the branch adjustment is being balanced off, okay, obviously you'll have different line items here that would basically represent line items over here. Okay, but based on the markup. So for this one, I would show it like this, just to show the splits. Okay, so obviously, you've got cash and credits. Okay, so let me just see the bank. Yeah, bank is normal bank. They don't identify it as head office or branch. Okay, so let's just keep it as is. Sorry, wrong page. That page. There we go. Okay, so bank, asterisk, cost price, markup, ultimately in the branch adjustment accounts. Okay, and then you've got the branch debtors, obviously because it's credits. Delete. Okay. Asterisk cost price, and then you've got the same thing. Branch adjustments. Okay, so you can just show one figure. I prefer showing it separate because obviously if it's at selling price, it's going to be cost plus markup. So in this case, you had sales of 35,800. Okay, and then you had 28 800. Am I using the right markup? Yeah, 25%. That's right. Okay. All right, and there's another one. Okay, so that's recorded. That's recorded. Next, returns to head office. Okay, what do returns do to your branch inventory? It decreases it. Remember, you had inventory to branch here.
Yes.
Obviously, if there's a return, it's going to go back to them. So you'll have the same line items, but a different amount. Okay, what is the inventory? What is the returns? Okay, this is at cost. All right, so if it's at cost, then obviously it's 37 here. And then you would times it by 25%. Does that make sense?
Yes.
Okay, so there's the branch at cost, and there's the markup at cost. Okay, again, similar to what you've seen here, there's the returns. Okay, they split it. All right, because they've split it there as well. Okay. All right, next. What else do you have? Cash received from branch debtors. Okay, if you have cash received from branch debtors, you're going to debit branch debtor, debit bank, credit branch debtors. Does that make sense?
Yes.
Okay, no impact on this account. Settlement discount granted to branch debtors. Okay, if the discount is granted to a branch debtor, what's happening? You're allowing them to pay you less than they owe. Does that make sense?
Yes.
Okay, if you go and look at this, you'll see here, let me just show it. We had, was it in the, I think it was in the receipt. Yeah, not in this one. Where was it? Here, branch expenses. I think they showed the branch discount in one of the examples. Not this one, looks like it. Let's look at another one. Here. Where's the discount? Where's the discount? Here. Okay, this was the discount on the sales. Okay, that was what I was trying to remember. Okay, so when you have a branch adjustment account, okay, if there's any discount on the sale, okay, you need to provide for it. Why? Because sometimes the branch might sell those goods at a discount. Okay, and they mention that here in the question. Let me see if I can find it. Here. Inventory was sold at selling price less 10%. Okay. Is that right?
Yes.
Okay. Yeah. That was the start. Yes. Okay. There wasn't anything else in this question. Okay. So you don't have to worry about discounts that relate to the debtors. It's not relevant. Okay. For the branch inventory, only inventory that affects the stock, not the sale. Right, so let's see. Okay, here you've got an inventory line item that was stolen. Okay, so obviously if they've stolen inventory from the branch, it's going to negatively affect the branch. Does that make sense?
Yes.
Okay, so this is going to record the branch expense for the theft. Cost price theft. Okay, and then obviously branch adjustment. Markup for the theft, branch adjustment. Okay, so this was at selling price, so 3750 times 100 divided by 125. Okay, it gives you that. All right, so there's your working. Okay, again, maybe just to contrast that with an example that we've seen before, here. Okay, this was stolen stock. There we go. Stolen stock, inventory stolen, markup on the stolen stock. Happy with that?
Yes.
Okay. All right, sundry expenses of the branch paid by head office. Okay, if it's paid by head office, you would have debited the sundry expenses or the branch expenses, and then you would have credited the bank. Happy with that?
Yes.
Okay. All right, 3.1. All inventory is purchased by head office and supply. Okay, we read that. That's fine. 3.2. During the year, a burglary took place. Okay, here's that burglary story. All right, so when I have cash that was stolen from sales, okay, we spoke about it earlier. It looks like they tested it here as well. Okay, let's use a different color. Let's use that one. Okay. Bank asterisk. Ooh, no, not bank. Can't be bank because bank would be debited. Okay, this was a theft. So branch expenses, I think that's what they use. Okay, branch expense. We'll go check it just now. Let's just record it, and then obviously asterisk. This would have been the cash that was embezzled, cash stolen from the branch. Okay, and then obviously you're gonna have a branch adjustment account.
I don't think you do that if cash is stolen. You don't break it up into.
Cash, yes. Obviously, cash doesn't have a markup.
Yes.
Sorry, that's correct. Okay. All right. Cash doesn't have a markup. It's not a sale. Okay, it's not stock. They stole cash. They didn't sell. They didn't steal stock. That's correct. Okay. 700 needs to go there. 700 goes to branch expenses. Was that right? Let's just double check. Branch expenses. Yes. Okay. Perfect. All right. No entries were made. Fine. We've got it. We've made the entry. Great. And then the last bit. Inventory invoice the branch at 28 included in the above amount of this portion. Okay, so
Yes.
in this 781, okay, they said that 2,800 Rand worth of the stock sitting in here, okay, sent to the branch at selling price was in transit. So if it's in transit, you would have to debit goods in transit, and then you would credit the branch inventory because you're reclassifying it basically. Does that make sense?
Yes.
Okay. So in order to do that, okay, what else did they say? Selling price of transit, okay, and therefore not including the branch's inventory on hand of 2,500. 2,500 was that closing stock. Yes. Okay. So basically, they're telling you that they sent an amount of goods to the business. They're telling you that they've recorded it, but not all of it has arrived. Okay, so is it correct to show the full amount? No, it's not. Okay, a portion of it is goods in transit. So in order to show the goods in transit, you would have to reduce the branch inventory account and then show the goods in transit as a separate line item. Does that make sense?
Yes.
Okay. Right. I think we have seen that before, actually. Here. There we go.
Yeah.
Inventory in transit. Okay, they show it here as a separate balance on its own. Okay, because that stock isn't going to be or hasn't been received yet, if that makes sense. Okay. The inventory that was in transit here was 75. This is the 75 that was included as part of the amount that was still in transit. Do you see that? Okay, I would
Yes.
still be inclined to show it separately as a separate consideration. Okay, I would have shown this as goods in transit, cost price, and then I would have shown goods in transit markup. Okay, and then you would have shown the 2,800. And then with the markup. Okay, and then they want you to show that here as well. So goods in or balance rather. This should actually be balance. Balance for goods in transit. Just going to abbreviate. Does it make sense?
Yes.
Okay, perfect. And then just reference those figures. All right, and then obviously if you've done this correctly, you just have to balance this account off, and then the balancing account will be that gross profit, potentially, that you'll have. Okay, which side's bigger? That side's bigger. So we actually need to shift it down. Let me just show that the adding. Okay, there's 80,700. This side's bigger than that side. Do you see that?
Yes.
Okay, and then you would reference that with branch adjustments accounts. Okay, or don't have to write account, just branch adjustments. All right, so the branch adjustment would be this minus all of this. Okay,
Oh, I got this right there.
well
The
done.
only thing was, because I ended up, the reason I thought I got it wrong was because I also ended up with 1725 and I thought it had to balance.
Oh, no, 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 no. Okay, remember, when you look at these accounts, let me just show you here. Okay, remember, this branch balancing amount, this surplus amount is something that you have to calculate. So depending on what account, depending on what the account looks like, let's look at another example. Let's find another one here. Here, this one. Okay, so here you had, where was it? Here, no, that was the adjustment. The balancing, here, the inventory shortage. I think that would have been the balancing figure. I can't remember now, but you're looking for the balancing figure. It just gets referenced in the branch adjustment accounts.
Okay.
Yeah.
So I would say branch shortage for the 1725.
Let's just make sure. Well, if you have, let's think about this. If you have branch inventory that they've given to the business and the debit side is bigger than the credit side, that means they've got more stock than they actually have. And then when they balance the stock, yes, it would be a shortage. That would be right.
Okay. Okay.
Yeah, they would be accounting for a shortage because the stock has not been accounted for correctly and there's a certain amount of stock that's outstanding.
Okay. Because
Okay,
I
what
got
did you have?
everything.
Yeah, you had everything else
Where
right.
did
That's good, eh?
Yeah, I had the 1725 and that's why I got it wrong. So it's just
Okay.
like,
Yeah, let's see
so
here.
yeah.
Okay, see here they balanced the account and then here they had a profit.
Yes.
Okay, instead of a loss. Yeah, so it just depends, yeah. Okay, perfect, good. Happy with that paper?
Yes.
All right, awesome. Let's save that.